Morning, Steve Freed in Chicago with the morning grain comments. Well, it's still cold here in Chicago today, and there's a winter storm that's going to be moving across the Midwest over the weekend. It looks like the storm is a little bit quicker mover, and it's a little bit further south, so we may not get as much snow as what was projected yesterday. Behind it, temperatures turn cold again, but in the 7 to 15 day maps, it looks warmer, and even temperatures look above normal. So maybe we're starting the little bit of a thaw in the 7 to 15 day time frame. Certainly, it's about time. Yesterday in the markets, a very interesting day, especially in the beans. We opened up about unchanged, maybe a little bit higher. We got the export sales data. It was better than expected. We rallied some stops through some key technical areas. We rallied sharply, and then near the high we saw some selling in the spreads that brought the markets down sharply and closed lower in the day. Some of the selling in the bean spreads is linked to maybe some speculative selling more than commercial selling, but there were rumors flying around that maybe China was trying to cancel some open U.S. soybean sales. If we look at the supply and demand right now, those sales need to be canceled because we just don't have enough beans unless the government finds some in their March 1 stocks report. So the numbers are still friendly. It's just that the trade is pretty cautious about yesterday's technical reversal. Corn and wheat follow the market lower, especially in the wheat market overnight. Bean prices, maize a little lower, corn's a little higher, and wheat's a little bit higher. Outside markets, the dollar is making a new low against the euro for this calendar year. As far as going forward, I think the trade is still worried about old crop bean situation. I think it's worried that on March 31 we'll find some corn stocks, and the wheat market is going to be a weather market in about 30 days from now. As far as the South American situation is concerned, we saw where the International Grain Council lowered their soybean crop estimate 4 million tons due to lower Brazil crop. We are seeing the possibility of a little bit lower supply there, and that maybe is supportive to the market, but also in China we're seeing lower feed margins, lower hog prices, and possibly lower demand, and that's causing lower Chinese ag futures. So a very volatile trade yesterday. We're just around the corner from trading the weather market for 2014, so expect volatility to pick up. Normal conditions in 2014 U.S. and prices should go lower. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.